Good evening, ladies and gentlemen. You're tuned into India Tonight on ET Now with me, Sumita Karir, and my colleague Jude Sanith is joining in from our Chennai studios. Jude, we have lots to talk about on the show today. What Ananta Nageshwaran essentially said, the BJP's new organizational team, and of course, what's happening with the rupee. So let's first, in fact, focus on that. The rupee was under pressure today after the RBI shortened its NRI FX swap window by a month. In fact, the currency slipped to 95 rupees and 60 paise per dollar, while importer demand and higher oil prices they added to the pressure. RBI intervention is cushioning the fall, we're given to understand. In fact, my colleague Meryl D'Souza is here to explain more on this and put the story into context. Meryl, what is it that we have seen and what is going to be the likely impact of this move?
Right, so the rupee is back under pressure, weakening about 0.2% to 95 rupees and 60 paise against the dollar, hitting a 2-week low. The trigger is that the RBI has shortened the NRI FX swap by about 1 month, a move that has surprised the markets. Remember, the scheme had already attracted more than $50 billion, and Bank of America estimates that total inflows could potentially reach around $80 billion. So any curtailment now raises concerns over future dollar inflows and rupee support as well. This comes despite earlier RBI commentary suggesting that there was no immediate plan to shorten the window, and at the same time, importer dollar demand is also adding to that pressure. While the RBI is likely to cushion the fall through intervention, including dollar sales via state-run backs. The pressure is also visible in the forward market. 1-year USD INR forward premium has now risen by 8 basis points, reaching up to 2.79%. The big risk now to watch remains crude oil. Brent is hovering near that $88 per barrel range, and higher oil prices could now widen India's import bill and put further pressure on the rupees thereby. The silver lining, however, is that the dollar index is softer at around $99.4, while stronger Asian currencies are providing some support as well. So for the rupee right now, it's a tug of war between RBI intervention and external pressures, with crude and dollar inflows both remaining key variables to watch ahead.
Well, thanks, Meryl, for that perspective. Lots happening then with the rupee, even as it is engaged in a tug of war there. But to help us put this in a bit more perspective is our very special panel of guests. We have with us this evening Abhizir Diwanji, the founder at Neostrat Advisors LLP, even as Ashwin Parekh, managing partner at Ashwin Parekh Advisory Services, joins us on the show. Abhizir, let me start with you. Now, the RBI, help me understand this, has attracted more than $50 billion through this NRI Forex swap program, and yet the rupee is around 95.6 to the dollar. Now, why isn't that huge dollar inflow supporting this currency more strongly?
So first of all, the dollar inflow is still coming in. Okay? And you will find that as the swap window nears its closure, more and more of these dollars will come in. I think today's implication was simply because of the abruptness with which Reserve Bank of India shortened this window. A lot of people who were expecting this window to go on till 30th September are not going to see that now. And hence people thought that, oh, the dollars will be less. But do believe that when the credit policy was announced, industry estimates were around $40 billion. And now we are looking at close to $60 billion. So I think the dollar reserve flow will come in. This is just a market reaction to the fact that it was abruptly lowered down in a day, though giving an assurance a week earlier that it will not happen. So I think this is just a market reaction, in a way a knee-jerk one. But the reality is that we will get huge amount of dollars coming in. And by the way, by far, whether you look at the resurgent India bonds of 1998 or the 2003 2000 IMD issue, or the one in 2018 that Raghuram Rajan did, in all of that, we have not received this kind of money. And this is simply because, the RBI has effectively subsidized the swap cost. And it has opened up the ceiling for FCNR rates. So that's enabled people to play on the gap, really.
Right, sir. In fact, let me also get in a word from Mr. Ashwin Parekh. Ashwin, what do you think is behind the RBI's decision of closing this a month earlier, given the fact that we were getting a rather good response with respect to this particular scheme?
Well, I mean, I've analyzed that there could be 4 possible reasons, One is, of course, when in June, I mean, the RBI announced the swap scheme, NRI swap scheme. The original target was just about $70 billion. Then we started getting good response, and this time around, like in 2013, the main factor for the response was the leveraging of the deposits, basically. So we saw that different banks were leveraging allowing the NRIs to leverage their deposits. It ranged between 9 to about 15 times in case of some of the foreign banks. That has really attracted the attention of the NRIs, and that's the reason why we saw a good flow. What is, however, a little intriguing, of course, is that we were getting mixed signals. When we had already mobilized about $40 billion, by way of FCNRB and also the OFSB as well as the ECB, other, let's say, instruments through which, let's say, the dollars come in. Then we got an indication that there was no question about, curtailing shorter the period of this particular scheme. Suddenly today, we get this announcement. Yesterday, RBI made this announcement. Today, we get this, that the window is going to be closed on 30th. So 3 or 4 factors. One is we've already got, as we speak, RBI's latest announcement is $56.3 billion by way of FCNRB deposits. That's one major reason. Second is, if you see, I suppose the Fed perhaps has played a larger role. The scheme was announced in June. Fed, July, the stance, under the new governor at Fed, the stance has changed. There is suddenly a hawkish stand, and there is question about hiking the rates now. So we are talking about even a stronger dollar. We are talking about RBI's risk, associated, and therefore the amount of the burden it will have to carry to repay that amount between 3 and 5 years will only keep on rising if the the rupee doesn't hold. So these are these factors. And perhaps the last one, compared to the Indian banking companies, I suppose the foreign banks this time have been able to raise, far more deposits. They've not only leveraged the complete subsidization of swap cost, but also at the same time, they've used their own balance sheets basically for the dollar deposits. So I suppose these are some of the factors which have played their part. But personally, I do believe that if the original target was $70 billion, and if we already mobilized around 60 by way of all the 3 schemes put together, then I suppose we are there. We are almost there. Before 31st of August, a lot of dollars. As
Right.
Abhiza said, we will certainly be expecting a lot of dollars to flow in, basically.
Absolutely, that expectation, of course, is all set right there. But Abhizir, if I could bring you back into the conversation, help me try to understand and analyze what the RBI could well be trying to do here. For instance, is the central bank trying to defend a particular rupee level, or is it simply trying to prevent a disorderly fall of sorts? And if yes, how long can it keep doing that realistically?
So first of all, we got to understand that what the RBI is trying to do is arm itself with dollars where it may need to support the rupee at some stage. And as Ashwin also said, that we've got what we had to get, and we kind of should be stable at that number. The problem really is, as again Ashwin said, the exchequer will want to control their costs because the cost this time for the hedge is on the exchequer. If the US market becomes hawkish and the dollar goes higher, then very frankly, the government's burden will go up significantly. The government will have to decide that this is the level of dollar I'm willing to take to be able to meet a future burden. That's on one side. The other side is to understand in India's side, the dollar outflows are governed by a higher oil price and the tensions happening in the Middle East, which is pretty much out of our control. The other big thing is that taking the advantage of stabilizing of the dollar in the current situation, our foreign institutional investors have been constantly selling in the markets. So clearly, you look at the situation where there is capital outflow because of the foreign exchange. There is increased oil outflow because of the Gulf War. On the other hand, the US has an hawkish stand, which basically widens our spread significantly for the RBI to take the risk. So at some stage, they would have had to decide that, well, this is not a free flow, then let me get all the dollars I can. I will have to manage my risk at a particular dollar level. And RBI would have said that this composite level should be at around $60 billion.
Right. So, in fact, Mr. Parekh, let me also get in your thoughts on this. Now, with this facility that the RBI created, of course, there is liquidity in the system. But could we look in the future, in the near future, at liquidity management of all the liquidity that's been created in the system, and how would the RBI move on that?
Yeah. So see, as far as the domestic current liquidity is concerned, in the last policy also, the governor has very clearly indicated that the liquidity at about 1 lakh crore plus in the system at the moment sort of should take care of, any amount of liquidity sort of upside or downside. But and then of course, the OMO and other windows are available to the RBI as far as the domestic liquidity is concerned. Now, as far as the dollars are concerned, already we've seen several measures have been taken by the RBI. We know now that, for example, the open positions of the banking system are not a function of the percentage of their net worth any longer. Only $100 million a day sort of is the open position that's normally allowed for any particular banking company. So there is a lot of issues around dollar flow and which is already being managed by the RBI. To my mind, RBI is not supporting a level. RBI is, I think, looking at the volatility in the rupee. It's only addressing that. I think at some stage or the other, both the government and the RBI will have to let rupee reach a point of, without any too much of intervention, when the market forces a certain level that it has to find on its own, basically.
Now, Abhizir, coming back to you, if in a situation where oil stays elevated while the rupee remains weak, how much should we be worried about fresh inflationary pressure building up in India, and how soon, in terms of a timeline, could that become a very real risk of actually happening?
But very frankly, inflationary pressures are there in India because of oil, because oil is associated with almost every cost that this country incurs. Everything involved. First of all, oil is going in your airlines, it's going in your transportation, it's going in daily usage of our people. So at the end of the day, I think oil-related inflation is a very big component of our markets. The other thing is that because of that, ancillary costs and because of the war in general, ancillary costs are also pushing up inflation. So India forever has had a supply side inflation to a great extent, and that supply side inflation is triggered most by oil. So clearly, we are trying to find fisc as an answer to operations related inflation, and that's always a challenge to deal with. Very frankly, I would commend the RBI for trying to balance its books the way it is. But frankly, we don't have too much choice.
Absolutely, Mr. Abhizir, very rightly put. The kind of balance that the RBI has struck is really commendable. We have time for one final question, Mr. Parekh, and let me come to you. We were speaking about how there is volatility on account of oil prices, and of course, this creates a fine balance. But what are the rupee levels that you're working with over the next couple of months? Because the Middle East crisis is not really over yet. There is no sort of a deal that's been struck, or at least has been arrived at between both the sides. So what are the rupee levels that you're working with? Because oil prices, they predictably will keep fluctuating and moving up and down.
Yeah, so it's anybody's guess, quite honestly. The kind of level that rupee will find, a lot of narratives are actually coming out of the Iran and US kind of situation at the moment. On every second day, we find that things are going to calm down, and then once again things flare up. So, and then once again it has its impact on the oil price. I think the only redeeming factor, if one was to really look at it more seriously, I think is the food inflation. We seem to be now getting to a point where, as Abhizir said, oil is going to be the major concern. We talked about, below normal kind of monsoon this year, but fortunately, from the numbers that have come out so far, it looks like a larger area of, the cultivable sort of land in India seems to be receiving at least 90% of the normal kind of rainfall. And therefore, the food inflation could ease, a little bit by November, December. So I suppose that could be one of the things that RBI also must be keeping in mind. Food inflation is not going to be as much of a let's say, challenge as we go along if the monsoons were to continue the way they are. So oil, and therefore the Middle East sort of, tensions is the only concern rupee to find a level, basically.
Right. So it's a day of reckoning then for both the rupee and India's central bank. So on that note, Ashwin, Abhizer, thank you so much for joining us on the bulletin and discussing this tonight. Great speaking to you both as always. Thanks a lot for joining us on India Tonight. Moving on, Union Minister Ashwini Vaishnaw has stressed on the importance of building a stronger Swadeshi supply chain, urging industry to increasingly use domestically manufactured components and sub-components. In fact, Mr. Vaishnaw said that India's domestic supply chain and manufacturing quality was some of the best around. Let's take a look at what the minister said.
एक बिल ऑफ मटेरियल में से कंपोनेंट्स निकाल के उन कंपोनेंट के लिए इंडस्ट्री के साथ बात करना और उन कंपोनेंट्स की मैन्युफैक्चरिंग को भारत में लेके आना सेम आपको भी करना है एग्जैक्टली सेम प्रोसेस विद इन योर इंडस्ट्री एवरी कंपोनेंट दैट यू नीड सब कंपोनेंट सब कंपोनेंट उसके लिए आप अपनी वर्कशॉप्स करिए see how much of the supply chain and value chain you can shift to India. Third ask is about Six Sigma quality and lean manufacturing. Absolutely must. माननीय प्रधानमंत्री श्री नरेंद्र मोदी जी ने लाल किले की प्राचीर से क्वालिटी का आह्वान किया है, लाल किले की प्राचीर से, और जीवन के हर क्षेत्र में हमको करना पड़ेगा, और स्पेशली इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग में, component manufacturing mein, this is something that has to be done. There is absolutely no way out of it.
Well, the IT minister there talking about Six Sigma quality in the field of electronics manufacturing, and staying with some more news. It's coming in from the same event. Well, the government's push to expand electronics manufacturing in India has received yet another boost under the ECM scheme. That is the Electronics Components Manufacturing Scheme. METI Secretary S. Krishnan said that the government has cleared nearly 31 applications in the latest tranche, and that really takes the total number of applications that have been approved to 106. In fact, these latest approvals are expected to generate significant production, while the scheme has already surpassed its original investment target. Let's listen in to what Secretary Krishnan had to say on the scale of investment and, of course, the production targets that could be achieved under the scheme.
Currently, we've cleared almost 31 applications which will be dealt with in this particular session or in this particular gathering, and totally the investment that we are talking about is 7,877 crore. So that is the next set of approvals that we are providing. And the interesting part of what is happening this time around is the wide variation of the kind of sectors which are getting covered, the specific groups of products which are getting covered, starting from capital goods, the camera module, display module, anode material, enclosures, connectors, transducers, rare earth permanent magnets, which is again something which is extremely significant, acetylene black, optical transceivers, speakers and microphones, relays, hermetic terminals, electrolyte additives, antenna, metallized films for capacitors, coils, filters, capacitors, metal shielding covers, and an enhanced investment in the copper-clad laminates, which had already been previously cleared.
And staying with that ECM story as well, let's go across to my colleague Mitali, who takes us through some of the stocks and companies in focus after those ECMS approvals. Listen in.
Right, so India is stepping up its push to build a domestic electronics component ecosystem, and on the basis of that, the government has cleared 31 applications under the Electronics Component Manufacturing Systems scheme, involving an investment of nearly 7,877 odd crore rupees. Now, according to the IT Secretary S. Krishnan, these projects across 10 states are expected to generate nearly 82,300 odd crore rupees in production and create jobs of nearly 10,000 thousand in numbers. For investors, here are some key names to keep the stocks on your radar. Jyoti CNC, which has an approved project of 1,021 odd crore rupees in capital goods, while PCBL is another one. PCBL Chemical, it is said to invest 329 crore rupees. Acuitas Chemical, it is another one which has been approved. Its application has been approved with an investment of nearly 119 odd crore rupees, while Syrma SGS has approval of 60 crores of investment, and also Centum Electronics, it has a 54 crore project approvals for transducers. Now these companies could be worth tracking based on the approvals of these projects that they have received. Also the bigger picture, it's quite significant. With the latest tranche, total ECMS approvals have reached 106 applications covering around 30 product categories across 15 states, and cumulative approved investment has now added to up to 69,548 crore rupees, surpassing the scheme's original target of nearly 59,350 crore rupees. Now the key takeaway from all of this, that India is moving beyond electronics assembly now towards a manufacturing critical components, a structural shift that investors should keep on radar for sure.
Absolutely, Mithali. That's a big boost to the components ecosystem in the electronics sector. But do stay on with us, because we do know that a leadership change is coming in at Airtel Payments Bank. Sunil Bharti Mittal will be stepping down as chairman on September 30th, with Shabnam Sinha all set to take over from October 1st. And this is subject to RBI's approval. Now, Sinha brings over 30 years of experience across financial services, public policy, and institutional transformation. She's already an independent director at Airtel Payments Bank and will now be leading the bank into its next phase of growth, digital innovation and financial inclusion. Joining us now, of course, Mithali continues to be with us. Mithali, take us through this piece of information, and of course, how did this come about, and what is it that could be looked at in terms of what the priorities of Shabnam are going to be at Airtel Payments Bank?
Right, so Bharti Airtel is in focus after a major leadership change has been announced in their Airtel Payments Bank, where Sunil Bharti Mittal will be stepping down from the non-executive chairman position dated September 30th, 2026, and from October 1, 2026, we will see Ms. Shabnam Sinha taking over the chairperson for a 3-year term subject to the RBI approval. Now, the transition comes as Airtel Payment Bank enters into a next phase of growth. Since Mittal took charge in 2016, the bank has grown into India's largest payments bank by revenue, and it now serves nearly 121 million monthly active new users and nearly 30 million account customers through more than 5 lakh banking points across the country, reaching roughly 3 out of 4 villages. Also, the bank has now emerged as India's second largest mobile bank, as well as the UPI auto pay player. And if you talk about Ms. Shabnam Sinha, she brings over 3 decades of experience across financial services, development finance, public policy, as well as the institutional transformation. She already serves on Airtel Payments Bank's board, chairs its fraud monitoring company, and is also part of the risk management as well as the IT committees. Her mandate will be to build on the bank's momentum, drive digital innovation, and as well as expanding the financial innovation. So we will see how this rolls out, but yes, keep Bharti Airtel on your radar after this major leadership change announcement has come.
And with that, we're all set to slip into a short break, but don't go anywhere, because India Tonight will be back in a bit. So keep watching ET Now.
Welcome back, ladies and gentlemen. You're watching India Tonight with me, Samita Karir, and my colleague Jude Sanet. Jude, let's put the spotlight now on the E20 debate. Now, that debate is continuing to rage on. And now adding value to the debate are the statements that have been made by India's Chief Economic Advisor, V. Anantha Nageshwaran. In fact, in an opinion piece, Modi government's top advisor has made a case to sell E10 fuel for older vehicles. Jude, what exactly has he said?
Now, these statements turned out to be even more contentious, Sumita, largely because it was only last month, remember, that the Petroleum Ministry had told Parliament that there were, in fact, no plans to sell E10 fuel alongside E20 at petrol stations and fuel stations. So will the CEA's personal take perhaps find place in India's policy decisions. In fact, we have a very special guest joining us to discuss this. Naveen Soni is an auto industry expert and the former president of Lexus India. Mr. Soni, thank you so much for joining us on the bulletin tonight. Let me start with the most basic question doing the rounds. Does offering E10 alongside E20 actually solve the ongoing compatibility concerns being raised by owners of multiple vehicles, including older vehicles, or does it create a completely different set of logistical problems on its part, which then begs the question, why the need for these two types of fuel in the first place? Mr. Soni.
Yeah, so the straight and simple answer is yes, it does solve the problem of majority of the vehicle owners, basically because any vehicle owner who's buying his vehicle today has the assurance or quasi-assurance given by the government that he or she will be allowed to use the vehicle till the registration of the vehicle is in existence. So for a petrol vehicle, 10 years, and for a diesel vehicle, 10 years, and for a petrol vehicle, 15 years in the national capital region, for example, fuel has to be ensured. This is the responsibility of the government because they are the kind of controllers of the oil industry. So therefore, they must ensure that the quality of fuel, which is required for these vehicles. So if you buy a vehicle today, the vehicle that you will run for 10 years, that kind of fuel for which it is made and engineered should be made available. So the simple answer is yes. To answer your second part of the question, yes, it does bring on logistical issues. That is why the government had kind of put upfront that this may not be possible a while ago in the parliament, as you mentioned. But having said that, if you are not taking care of, say, 85 to 90% of the vehicles that are running on the roads, see, because every vehicle owner who's buying the vehicle today has the assurance or a quasi-assurance given by the government to have the fuel available for the type of vehicle that he or she owns for the duration of the vehicle life history. So from that point of view, I think E10, I've been saying this in the past also, would solve most of the problems faced by the owners today.
Absolutely, Mr. Soni, and it sort of, both the sides on a middle ground, given the fact that we have been privy to, of course, the kind of commentary that's been made by naysayers because they claim that they have received complaints by consumers. But of course, the auto industry has a different, sort of view to hold. And this particular opinion piece that I have with me, in that the CA says that the charge is loud, but it's also on the main point wrong. And I'm here talking about the E20 fuel. But Mr. Soni, now the question is, when should we move to higher blends? That's an important one as well. And what should dictate that decision? And what can be learned from countries like Brazil, which have actually moved to these kind of fuels?
Yeah, so the simple answer is, if you look at what Brazil has done, from 1972 till date, they have been gradually moving up the ladder as far as blended fuels are concerned. It has not happened overnight in Brazil. So for the case of Brazil, 1972, when the first petrol crisis happened, they started slowly, gradually moving towards, blended fuels. And the blend kept on increasing. My view on this is that there are three main stakeholders. One is the government, which defines the regulations. One is the oil industry, which dovetails its products to these regulations. And the third one is the OEMs, or the original equipment manufacturers, or roughly said the automakers, who again fall into as far as the government regulations are concerned, and make their vehicles compatible to these regulations. Now the thing is that consumer at the beginning, now he becomes a very important cornerstone for this. So if these three stakeholders move hand in hand, and which has been happening in the case of Brazil also, then what we will face is that we'll have a very smooth transition into this new world of blended fuels. If you read the CEA's article also, it very clearly points out some very important, and I would stress on those, the environmental benefits that he's talking about, the problem of fuel conservation as far as import bill is concerned, reduction on that is concerned, that he's talked about. But at the same time, he's talked about the problems faced by existing owners, and how do we, especially the vehicles that have been made before, say, 2023, which did not have the assurance of E20 compliance because they were not mandated to be E20 compliant. As simple as that. So if today these vehicles are being forced to be using E20 fuel, obviously there will be some ramifications. Now, this is coming out in different forms and shapes through various, how should I say, fuel consumption drop and others. Yeah.
But Mr. Soni, what actually causes concern, at least the way I read the situation, and you can correct me if I'm wrong, is that when a new baseline is being set in terms of E20 being, the policy-driven fuel norm, which has also then attracted a lot of negative reporting in the recent past, especially given that the risk of spoilage and the risk of mileage being impacted severely. And now when the government brings about an E10 variant, surely a move towards or a preference towards E10 and demand going up there will give the oil companies, will give the industry the opportunity to attach a premium on E10 fuel. And that's rather ironic from a customer point of view, isn't it? Given the fact that our pre-ethanol era had us all fill plain and simple fuel. So how is this fair or just to the consumer? Even that choice notwithstanding, the fact that you have the option to pick E10, but at a possible premium, is that okay from a customer POV?
Definitely no. But as far as pricing is concerned, as far as the pricing of fuel is concerned, it is never ever cost plus pricing. And the price of crude varies on a daily basis, if not hourly basis in the global markets. You don't mean to say that, that because of that, the price of fuel that is available at the petrol bunks is varying on a daily or hourly basis. No, it doesn't happen like that. The pricing is a matter of, like in the case of any competitive industry, what is the right price the consumer is willing to pay for this? And logically, if you ask me, E10 or E20, and this has been a stated policy in the past by the government, will bring about one benefit to the consumer, that is the price of the fuel will be lower than the pure fuel that it's being supplied. However, today's anomaly is that if you were to buy E0 fuel, which is premium quality, you will pay up maybe 40%, or if not less, premium. So if you're paying, say, 100 or 110 rupees for petrol, for that kind of petrol, you are already paying 160 rupees at the petrol station. So pricing, please keep it away from cost.
Absolutely, Mr. Soni, that's a valid point that you've made. And in fact, the government of India's argument is that we need to reduce our dependence on oil and energy imports. And of course, crude oil bill is to the tune of 11 to 12 lakhs. It remains to be seen to what extent the usage of higher blends will be able to cut this bill. But we have time for one final question. Let me ask you, how prepared is India's existing vehicle fleet for E20 and potentially higher blends at the moment? There's been a lot of back and forth on this, a lot of debate on that. SIAM retracted that letter as well that was reportedly written, to the Petroleum Ministry. But in your opinion, and from the kind of conversation that you have been having with auto makers and other industry honchos, what's your assessment of this matter?
So again, it's a very regulated industry. So anything the automakers are producing as fresh vehicles, brand new vehicles, have to and must comply to all the regulations prescribed for that kind of class of vehicles. So in the current state, from 2023 onwards, the government had prescribed that that we have to have all vehicles, irrespective of the Euro status, the Bharat state status, which is currently in vogue. This has to be currently E20 compliant. So all vehicles that are being produced. So the second only exception that is being made now is the recently discussed issue on flex fuel vehicles. Flex fuel vehicles is a separate animal. It's a separate category. You have to consider this in the light of, that it is capable of handling E0 to E100 as far as ethanol is concerned. So those are special class of vehicles, have to be engineered differently and then put in the marketplace to suit the requirements. And then, of course, fuel can be any in that kind of vehicle. Right. There is no restriction about E10 or E20 or even greater blends.
Absolutely. Well, lots to discuss there and a whole lot of nuance to deal with as well, especially when it comes to the aspects of fuel and, of course, E20 and quite possibly E10 in the foreseeable future. But on that note, Naveen Soni, thank you so much for joining us on India Tonight and breaking this down for us. Pleasure speaking with you on the show tonight.
Always a pleasure. Thank you so
And with that, it's time to slip into a short break, but don't go anywhere because we'll be back on the other side of these messages. So keep staying tuned to ET Now.
Welcome back. You're watching India Tonight with me, Sumita Karir, and my colleague Jude Sanith. Jude, let's take a look at all the geopolitical developments that have been happening. Let's take a look at West Asia and what's transpiring over there. Well, the US-Iran standoff over the Strait of Hormuz has taken a dramatic turn, with President Donald Trump threatening to bomb Oman as the Gulf nation continues talks with Tehran to reopen the strategic waterway. In fact, Donald Trump said that the US could take military action if Oman gets in the way, and told Iran, quote-unquote, raise the white flag of surrender even as a 60-day ceasefire window with Iran that expires without a formal deal. Now, Iran continues to deny direct negotiations with Washington, while Trump claims that informal talks are currently taking place with Iran's Revolutionary Guard. So, of course, what we've also gathered from reports is that a geographic map, a rough geographic sketch has been decided upon between Iran and Oman. However, there is some delay with respect to this particular agreement that they're supposed to be finalizing. And of course, this was also part of one of the key aspects of the MOU, the 14-point MOU that was agreed upon between the United States and Iran. However, there is some delay that's happening. And of course, Mohammad Ghalibaf has also spoken about that. We've also heard from other quarters of Iran, and they are suggesting that external actors and the way that they're meddling, that is leading to the delay in this framework being agreed upon, because remember, you do have the United States, which wants the control of the Strait of Hormuz. And of course, we've heard from several of the top ministers, the top secretaries, talking about exactly that. But Jude, how's the US market looking like? How's Wall Street trading? What do the signs really reveal on the back of that news? Do we see a lot of correction that's currently happening on Wall Street?
Well, let's take a look at how those US markets are at the moment, Sumita. It's pretty much flat, even as the Dow Jones Industrial Average is down by less than 0.4%. This even as the S&P 500 also remains relatively unchanged, down by just about 0.15%, and being the only indices, but that's just less than 0.5%. Thanks to optimism in AI stocks. Now, while the uncertainty with the war has, continued to prevail, the market simply is not going all green, choosing to remain pretty much flat, even as we bring you, that live market update itself. But sticking with the U.S. itself, Sumita, it seems like President Trump has welcomed that tripartite deal, the Mecca deal between those three countries in West Asia and Central Asia as well.
Absolutely, Jude. So President Trump has welcomed the Saudi, Turkey and Pakistan defense agreement, and he's called it a big, bold first step. In fact, my colleague Srinjoy is joining in to tell us more about this fact. Srinjoy, definitely this is a shot in the arm as far as, these countries are concerned. We do know that Pakistan has been involved in negotiating an MOU. They also want these talks to move further and peace talks to happen. However, they haven't really happened. But now this Mecca pact that has been sealed between amongst these three countries, that sort of goes on to show how the Middle East is sort of forming its own fronts.
US President Donald Trump has had kind words to say about the Islamic NATO, or at least the so-called Islamic NATO, which comprises Pakistan, Turkey and Saudi Arabia. Now, he has said that this will lead to a more stable Middle East. We have to see whether that happens or not, the Middle East being as unstable as it is. But there are really questions that have to be asked about this, because in the case of NATO or the NATO countries, the attack on one NATO country is seen as an attack on all NATO countries, which means if, say, one of the small Baltic countries is attacked, then it means, theoretically at least, all NATO countries, including the United States, goes and defends that country concerned. So is that going to be the case with this alliance? For instance, the Saudi Arabians have been attacked several times by Iran. Their missiles and drones have hit even a refinery in Saudi Arabia. There have been several cases of major attacks on Saudi Arabia by Iran. Of those 6,000 attacks on the Gulf countries, of course, the most have been on UAE and then the others. But Saudi Arabia has faced a significant number of attacks. Does that mean that Iran will be attacked by Pakistan? Pakistan and Iran are neighboring countries. So far, we have seen no sign of that. So how this will work out really remains to be seen.
And staying with defense but shifting focus back home here, the Indian Navy is set to get a major boost to its maritime surveillance capabilities, with the Defense Ministry signing a contract with General Atomics Aeronautical Systems to lease two MQ-9B Sea Guardian drones for 30 months. Now valued at around 1,943 crore rupees, the HALE remotely piloted aircraft are equipped with advanced sensors and surveillance systems. They will provide persistent intelligence, surveillance and reconnaissance coverage across vast stretches of the maritime domain, strengthening India's ability to monitor developments across the Indian Ocean region. Now here's more on the MQ-9B Sea Guardian deal and what it means for the Indian Navy.
Absolutely, Jude. And let's now take a look at the day's top political development. Well, the BJP has unveiled a major overhaul of its national organizational team, with party president Nitin Nabin bringing in a mix of experienced leaders, younger faces, and greater representation for women. There are also major changes in the national secretaries, Morcha leadership, media, and digital teams. Remember, this reshuffle is coming in at a crucial time. This is coming in ahead of a crucial electoral cycle, with Punjab, Gujarat, and Uttar Pradesh among the key states that are going to be in focus. My colleague Mohit is putting this development into perspective, and he gives us more details on the names that are part of this new reshuffle at the organizational level that BJP has undertaken. Take a look.
The much-awaited new BJP team of Nitin Nabin has been announced after 8 months today, and it's a mixture of youth, women, and experience for the Bharatiya Janata Party. Now, when it comes to the National Vice President, the names of Vasundhara Raje Scindia, Tirath Singh Rawat, Ram Madhav, Baijan J. Panda, D. Purandeshwari, Rekha Verma, Varsha Ben Doshi, Bharti Praveen Pawar, Sardar Manpreet Singh Badal, Lal Singh Arya, M. Nagaraja, Tariq Mansoor, and Madhuchandra Kar are there. So there are in all 13 vice presidents for the Bharatiya Janata Party. Now, B.L. Santosh remains the General Secretary organization of the Bharatiya Janata Party, and we know for a fact that how there is a massive overhaul when it comes to the General Secretaries. Now, General Secretary is a very, very important post when it comes to Bharatiya Janata Party and election planning. Now, these General Secretaries usually are the in charges of 2 to 3 states. They travel often, and also they basically coordinate with the state unit when it comes to the elections. The Smriti Irani, one of the most senior leader of the BJP, who has been canvassing for the Bharatiya Janata Party for a long, long time, the one who defeated Rahul Gandhi from Amethi, but still she was very active in the politics, has been appointed as the National General Secretary, along with Biplab Kumar Dev, Vinod Tavre, Sunil Bansal, Satish Punia, Gajendra Patel, Harish Dwivedi, and Sanjay Bhatia. So in all, 8 General Secretaries have been appointed by the BJP. When it comes to media, the media in charge of the BJP remains same, Anil Baluni, but when it comes to the co-in charges, there are 3 co-in charges now for the Bharatiya Janata Party when it comes to the media, and one of them being Pradeep Bhandari. We also know for a fact that how there is massive overhaul when it comes to the national secretaries, and the name of Sandeep Pathak has also been added to as the National Secretary of the Bharatiya Janata Party. Now remember, this comes at a time when Punjab elections are around the corner, and Sandeep Pathak was the Aam Aadmi Party convener, and he was somebody who was associated with the cadre on the ground. He was said to be somebody who galvanized the cadre in the state of Punjab and in Delhi, and he has joined the BJP.
And with that, it's a wrap from us right here on India Tonight. From Sumita and myself, it's thank you and goodbye for the moment, but keep watching ET Now for more.